What is good, guys? Welcome back to my channel. Before we get into the breakdown of my August trades, quick reminder, the September signups are closing tonight by the time this video drops. So if you want to join, then use the first link in the bio down below. And that being said, let's get into the breakdown. Let's get into the monthly trades review stream, where I'll go over all the trades which I have taken this month. It's always the entire journal since I started journaling again on Notion. You can find the link. I think I've sent it multiple times into different channels. Pretty much, yeah, as you can see, started again journaling with this one on June 9th. And since then, as you can see, 31 trades taken. But to only take a look now at the August ones, we'll take a look at this one. So as you can see, this month I have taken in total 8 trades. I do have to be aware that I have been on vacation 1 week. I think somewhere around here, second week of August, I think, between this time window, where I obviously could not trade all the time. I still do trade on vacation, but obviously it is not my priority. But there have been some decent setups which I sent out for the analysis. I think we had UJ shorts in that week, and also I think another pair which had a decent setup, which I saw many of you taking. But I would say we go over each trade step by step. You can see here in total I am around 11.3 R for this month. I still have this position, the longs from Euro, on yesterday, Friday. I still got some partials running into the next week, but so far I've closed 3R, and we'll see how the remaining partials will play out next week. If I can get some more R on those longs, or if the rest will go into break even. We will see. Now, before we get into the trade breakdowns of the first one on August 4th, there's one thing which I want to talk about, and that is most of you guys, if you journal your trades, what you always want to do is you want to add a category. I might add that to the journaling template, this one here, but you can also add that on your own to your journal, is that you want to have a category where you tag the trade based on if the trade was part of your system or if it was a trade out of your system, being, for example, an emotional trade like a revenge trade or a trade you just felt like taking for whatever reason. Why is it so important? Because your journal is pretty much your blueprint to make your system work out over time and refine your system. Now, in my case, my system was obviously quite refined already, and I almost never take trades out of my system, which is why I don't have that category anymore. But for the most of you, since you are obviously beginners or still in your early stages of your trading career, you still take occasionally, or some more, some less, trades which are out of your system, being, as mentioned, emotional trades, being trades you just took out of boredom, or maybe you don't even have a proper system and you don't even know, for example, what your setup looks like or is supposed to look like, and you do take those random trades. What you definitely don't want to do is you don't want to say, okay, I know it was a shit trade, I know it was a trade I'm not supposed to take, and therefore I will not journal this trade in my journal, which is the worst thing you can do, because if you only journal, the good trades, the winning trades, the ones, which you enjoy journaling, it's obviously the painful work because you don't like to do uncomfortable things. Everyone loves to journal their winning trades, but most people, they don't like journaling trades which are losses, especially even if you take a loss which was out of your system, right? Because you know deep inside that trade was a trade which you shouldn't be taken initially, right, to start out. But what you want to do then, why it's so important to tag those trades, so you then tag the trade, for example, was it a loss or a trade based on emotions, based on boredom, whatever it might be, or was it just a loss which is part of your system, you know, because you will take losses, and some losses are just part of your variance, right? No system has 100% win rate. All systems will have losses eventually. And you don't want to use those losses which are part of your system, meaning they are variance, right? They are a normal loss distribution. You don't want to take those losses to then refine your system, because if you always take each trade, which ends up being a losing trade, and use that to tweak your system to find a new rule, you will over time always refine your system, and you don't have a consistent system which you can use. So only use those trades which are part of your system. And if you have a large sample size, then you can take a look, okay, is there anything in the losses which they have in common, which I can, you know, incorporate as a new rule or a new thing part of my system. Second thing is, if you see, for example, at the end of the month, you have all the trades, you've journaled how much you made on each trade, and at the end of the month, you have like a losing month, or you have, you know, like only 1 or 2 R, which is obviously still good because you made money. But if you see, for example, you are down for the month, then that's why it's so important to know, okay, which trades actually made me losing money? Like, was it the trades which are part of my system, or is negative P&L at the end of the month caused mainly by the trades which I've taken out of boredom, or because they were emotional trades, like revenge trading? Because the main question is always, if you don't make money trading, you want to ask yourself, before you know how to fix that, you have to know what is the reason which leads me to not making money. And if you don't know that reason, you don't know what to fix. And if you don't know what to fix, you obviously can't improve. Meaning, if you see, for example, okay, let's say out of those 8 traits, you have flagged, for example, 4 of them being emotional traits out of your system. And if you would have cut them out and not have taken, you would say, okay, I would have been actually in profits, but because I've taken those traits in between, I am at the end of the month now in drawdown. Then you know, okay, the reason you failed your system, the reason you failed because you always take shit trades in between your good ones, meaning you have to work on your discipline when it comes to execution. So you know, okay, I don't actually lose money because I don't have a system or I don't have an edge. I lose money because I don't have the discipline which requires to make money consistently. That's the first outcome, right? So you know, okay, my main thing I have to work on is my discipline. But if you see, for example, I barely take trades out of my system, and all the trades or losses, or most of them I've taken, are actually, you know, valid losses, so to say, then you know your system might not be having a positive expectancy, right? Because if you have a system over time, you should make money in a bigger picture. Obviously, there might be a month where your system performs worse and you have like a losing month. This can happen. But if you see, you know, multiple months, you have losing months, then your system is simply bad. The system has no edge, meaning, you know, I have to work on my system because my system doesn't offer me an edge in the market. If you have a good system, even losing a month should be quite a rare occurrence. Obviously, if you trade over the years, even the best system will have sometimes a losing month. I personally did not have losing month in like 2 years now. Like my worst month was like 2 to 3 R, which is like obviously still good, but not obviously also a great month, right? Losing weeks are totally normal, right? You will have losing weeks. Losing months, as mentioned, some of them you will have some over the years, but you shouldn't have losing months or the majority of the months during the year. That makes sense. So with that rant being done, let's get into the actual trades which I have taken or we have taken this month. The first one, as you can see, was on August 4th, which was on a Monday, was on Swissy, and ended up being partial loss for minus 0.1 R. So let's take a look at what those trades have been. As you can see, it was a swing trade, London reversal profile, sell, and result partial loss, entry time 11 a.m. CET, and I closed the trade because I didn't like the feedback of price heading into the daily closure of both Swissy and DXY. Now let's take a look at the higher time frame chart. As you can see here, we have seen Swissy trading above this daily bearish imbalance into this upper one. Then we swept this previous swing high. This placed lower, closed back below this bullish, or actually bearish imbalance, and also we closed below this bullish imbalance we formed on the way up. Then the entry here was pretty much a turtle soup, where we have seen price displaced lower, we formed here the reversal, and the idea was that we have here potential market maker sell model. And we have the consolidation here, we have the reaccumulation, we have the reversal, then we displaced lower, then we formed this bearish dealing range, we got daily bearish key level, and we then engineered this weak high on the H4 inside this bearish dealing range. So the idea of this trade was to look for price to run this weak high into the key level and then look for sells from down here. As you can see, we already swept this high in Asia here. And then once I got on the charts and I saw price still being at this high, I was pretty much entering here this as a turtle soup short. So this is the low risk sell. In this case, I used a turtle soup. Why? Because we overall have a bearish order flow in the weekly time frame. The daily turned bearish again by showing price closing below this bullish imbalance and closing back below, reclaiming this bearish one. And then I turtle soup shorted this using the BPR as my invalidation, or the inverse value gap at this point. Then let's take a look at how this played out. As you can see here, I entered the trade around here, right, on Monday. That was the high, the H4? Yeah, this H4 weak high, and I entered then on the H1. During London session. Another round here above this high, and then price, as you can see, just consolidated heading into the daily closure. Once I saw, because this trade was on a Monday, and I did not see price displacing from this high into daily closure, you can see we consolidated. I decided to close this trade because if we don't see displacement on Monday into daily closure and price is my entry, then I do expect price to the next day run above the Monday highs. Then look for potential Monday range play. We run above the Monday highs, and then if we can get deviation, I can re-enter this short with a better entry and also a more defined invalidation. Because if I leave my invalidation was 81.2 on those levels. Because if I leave my trade running like that, and I do know, okay, I expect price to run above this high again, it could also potentially deviation, could also potentially tag me out here at this stop. Now, technically, I don't want to see price to retrace that deep back into this consolidation and above this daily inversion fair value gap. But because on an intraday basis, since we have not seen this placement into the daily closure, we could also see price giving like a wick in the hourly into my SL and then retrace. And to not get trapped in this short, that's why I then close this trade here. And then on the next day, if we get that setup, I can always re-enter this short position. The next day we get above, and as you can see, I would have still been in the trade, but you can see I could have also easily gotten stopped out on this wick here. And that's exactly why I decided to close the trade here around my entry. Then the next trade was actually again on Swissy the next day, which I think was on that same idea which I just outlined. We had here price, then the next day sweeping the Monday high into then this PPR. Previously on Monday, we only had formed an inversion fair value gap, but with Monday's daily closure, we did form then this bearish imbalance. So the overlap of the inversion fair value gap and the bearish imbalance, this purple rectangle, that is now the BPR. And as you can see here on the H1, we have a deviation here above the Monday range high. We had this minor or this relatively small only imbalance here, which we closed below. And then on the next candle, you can see here, I did enter here on this propulsion block. Right? We saw price forming propulsion block, then we got the hourly closure below the bullish imbalance, and then I ended on the next candle's open high low close invalidation above this propulsion block here. And you can see how price ended up selling off, and I ended up realizing 2.5R. I think I hold this trade for quite some time, as you can see, for 2,760 minutes actually. And as you can see, if I would have closed perfectly at the low before price reversed to my entry, I could have gotten 4.2R, but because I left partials for lower targets, which then got stopped out at break even, I ended up realizing 2.5R on this setup. And you can also see, if I would have left that trade initially from Monday running, let's see here, 0.82 was my stop. For price to give me a 2R setup on this trade, I would need price to move all the way down to at least this low, right? And you can see I would have gotten 2R for the setup. So Monday low, and then I even wouldn't need to see price giving continuation to the Monday low into this low we have right here on the middle of this daily bullish imbalance. And if we see how that would have played out, you can see I wouldn't have gotten even this TP, right? Price would have just continued to jump around, and entire week price would have just more or less chopped around at my entry. Now, if we take a look at the setup I then took on Tuesday, you can see the lowest this trade went was on Thursday, just low. And for 2R, it already hit 2R on the same day. So that's where I then also took my first partial on that low. And you can see that's the beauty of if you can refine your entry. You say, okay, that trade doesn't really make sense anymore into the daily closure. I will now wait for price to trade back above the Monday high, and then I will look to reposition myself on a better setup. And as you can see, 2R on this move, while for 2R on that move, I would have needed price to trade below the Monday low into the middle of this daily bullish imbalance, which it never did. Right? And then I had more partials on that trade down here the next day, and then the remaining of the position I think went to, or I closed it around here on that move up once we swept this high, and then this placed higher, and then that's where I closed, I think, the remaining partials right below my entry. Those were the first two trades of August. And then I had on August 6th my third trade, which was on UJ. Again, an intraday trade based on New York continuation. Again, a short, and on this one I realized 1.5R. Could have gotten 3.5R if I would have exited at a perfect low, which you obviously can do, but you still want to journal those things because it tells you quite good how much of an expansion in the sense of how much risk reward could you get per trade. So, for example, if you see most of your trades always run above at least 2R, then you know my first partial, my full TP, whatever you use as your TP management strategy, should be around the 2R mark. Or maybe if you see most of my trades run for at least 3R, then it should be around the 3R mark. For example, also 1R works depending on your system. If you have a high win rate, then it can also be making money with 1R. So there's no right or wrong. It always depends on what is your system. But usually the sweet spot will be around the 2R mark for most traders. So daily time frame, we have seen here price double sweeping the range highs here. We initially set the range high, we retraced lower, left behind equal lows above this bullish imbalance, then retraced higher again, closed above. Then we saw this massive down close candle closing back below this imbalance here. So we have reclaimed this bearish imbalance. And then obviously we want to look for, or the biases to look for sells into those lows. And then we have a higher time frame draw, which are those equal lows. See here, we had this previous day's high, we had this BPR on the H1, and we then run this previous day high into this BPR. We have seen lower time frames, then price, also leaving behind those equal lows, which were my first TP. You can see here, that's where I partialed, and then quite unfortunate, my remaining partials, which I wanted to TP down here, they got stopped out on that wick. Right? You can see, quite unlucky. We went for this wick high, which I initially entered on. So we swapped the equal lows, then I went break even, and then we had some news coming out here. And on the news, it tagged me out right at break even on my remaining partials. And then it just runs straight into the TP afterwards. So a bit unfortunate. Otherwise, I would have made on this trade instead of 1.5R. I would have made, with the partial 2R, probably around 2.8, 2.7R. But sometimes you just get unlucky and stuff like that happens where you get straight away stopped out the break even, price just dumps lower into your initial TP. I think that was the last. No, it wasn't actually. I think, it was the first week of August, and then the second week I was on vacation. I think before vacation I took only one trade, this one on Euro, and I had one partial loss for minus 0.6R. Then on the same week, August 7th, which was on Thursday. The setup was a New York reversal on Euro, a long, and then entry PT area was inversion, fair value gap, and order block. And as mentioned, I ended up taking here a minus 0.6R loss on this one. The reason I closed early was based on DXY and a lower time frame feedback which the price action gave me while being in that trade. Daily chart, and then on the hourly, this was pretty much a continuation long. We have seen price here, we had this quite large expansion days before. We formed this massive bullish dealing range. And then I entered here below this swing low, which we swept. You can see now here, that's also where I always journal the higher time frame chart, the hourly chart where I frame a narrative on, and then the entry time frame. To later on, see and compare the charts of my trades, how they look on the daily time frame, how they look on the hourly time frame. What I can see here now is this trade, the key level here is obviously not really ideal. Right? We do have this low here. We got this proportion block below as well, which is probably why I decided to enter this trade in a premium of this range. Obviously, it would have been more ideal if this low would have been in a discount of this range. We take the low to the high, and you can see here the price ended up retracing back into discount of this range, into this bullish imbalance, which lined up with the inversion fair value gap. Then we got the continuation from this discount of the dealing range. entry, swept the low, and then we saw price forming here an inversion to value gap. We closed above, and also we used this bullish imbalance to form the bullish order block once we closed above here, and that's where I decided to long, although we have not been in a discount yet. As you can see here, we haven't been in a discount. We had some key levels when the hourly which I told you, this approaching block and those lows. And we did have key level, but it was not really the most high probability key level, right? Because we did not retrace all the way into a discount. But since we had this lower time frame confirmation, that's why it's okay. If we are truly bullish, we could see price already expanding from here without returning back into the discount. But even though we had this confirmation here on the lower time frames, ended up being wrong. And you can see here, I closed the trade around here because price closed back below this bullish imbalance. We formed this bearish OB here after sweeping this weak high, and that clearly invalidated the bullish scenario. And I decided once this candle closed to close my trade here for partial loss instead of holding my trade all the way down here, because obviously once we have seen this candle closure, it is extremely unlikely. Also, we have done a close session open coming up here. That price will still be bullish, and therefore then I closed this trade for a partial loss. Then next trade was on August 13th. That's where I've been on vacation. As mentioned, there were some decent trades. Typically, when I'm on vacation, we always have the cleanest price action. Last time when I was in Mexico, I think it was in March. Yeah, March. We had like 300 pip daily candle on euro. You guys remember? It was around this time window, either this move or that move, I don't know anymore. But that's where I have been on vacation and price really moved like 400 pips or so in a week. It was crazy. Yeah, anyways, missed the trades on UJ and another one where I don't know anymore which pair on the other week. And then the only trade which I have taken then on vacation was on euro on August 13th, which was intra-session trade. And I ended up netting 1.5 R on that setup. So this was a counter trend intra-session trade. We have swept the range highs. We have seen price being here in a consolidation more or less in the last few days. Then we swept those equal highs, and then I looked for a counter trend scalp. You can see here we traded above, then I looked to short price into this flat open here of this imbalance, and that was the setup. We have seen here Asia lows being intact, London lows being intact. We then saw price trading above. Then we have formed here a double confirmation. We had this inversion for value gap. We retraced into it, swept those weak highs, closed below, and then I entered here on that candle, stop above the strong high. Again, I could not manage that trade because I was at the beach. My TP limit order was right here, it's flat open, as mentioned on the H1 this year. And you can see here it literally reversed right above this flat open. Once I got on my phone, price was trading around here, and then I closed manually the trade around those levels here because price displaced that behind here bullish imbalance. And you can see price also ended up being bullish again. Then the next trade was actually the only full stop out I took this month, full 1 hour loss. That was euro long. Yeah, so the target was those previous days highs. And then I did enter here on a New York reversal profile, right? Swept that low, double swept those lows in New York session, and then we had this bearish imbalance above, and on lower time frames I then entered here. Now in hindsight, I gotta say this trade was quite shit. Not sure why I did take that one. 2 and 3. No, it was introsession, then it was reversal, propulsion block. If any notes here, it was this makes sense. Risky trade. So why I took this trade? No, it makes sense. The lower time frames was not really bullish yet. You can see here we had this bearish imbalance above, which we ended up respecting here on that retracement. But I took this trade because if I am right here, I would have used this imbalance, closed above, and then expand higher. Break even would have been around above the New York session highs. Then this would have been a really high risk reward trade. And I could have gotten like 4, 5, 6R on this trade because I can aim for London session highs, Asia highs, previous days highs, and because that trade being high EV, and what I always talk about the last few streams, I decided to take this trade from this propulsion block here. We have the OB, those down close candles. We then retrace, close above, so that's the propulsion block. Then I enter the next candle, stop at a strong low after we have double swept those lows here. The price ended up being still bearish, retraced, and then stopped me out for a full loss on those longs. You said London close continuation back then? Yeah, I think I was anticipating here London close continuation of that manipulation. We have bullish order flow, we swept that week low inside this bullish dealing range. Then we have double swept this low. Then we got also session profile, New York manipulation below the London lows, and then lower time frame confirmation, anticipating that London close to be a continuation profile of that New York session manipulation. You always want to use the previous session profile to anticipate what could be the profile of the following one. If the previous session was manipulation, you can expect the following up to be met at distribution. If the previous one was expansion, you can expect retracement or consolidation. As always, as we use the session profiles to get an idea of what might be the most high probability profile we can expect in the following up session to be. So -1 here, and then we had some absolute banger trades to finish the month. Pound last week, and then also Euro yesterday. And what I always tell you guys, you only need like a few really good trades per month to have a really good month. As you can see here, I made on those 2 trades, I made 7.5R out of the 11.3R, meaning more than half of the profits I made this month were on those 2 trades. And what I want to tell you guys with that is that you have to be patient with your setups, because if you see, okay, you are on break even for the week, had no trades, whatever it might be, and you then use that as an excuse to take shit trades because you think, okay, there might be the possibility I will take a win, then you give your power, which you have by adhering to a system, out of your hands. And that's the worst thing you want to do. You always want to make sure that you're always in control of your actions. And what you can control is which trades you take. And if you simply are fine with saying, okay, if there's a week with no trades, I take no trade. Like this week, right? If there wouldn't have been a setup on the last session of the month, literally, on Friday, I would have been fine with not taking a trade this week. But because setup formed on Friday, London closed, I took the trade and I made 3R. While doing nothing from Monday to Thursday, right? No trades taken. And that's really what you have to master, to sit on your hands if there's no setup, not starting to doubt your system or to doubt yourself, and that leading you taking dumb trades. So the pound shorts on August 21st, intraday, New York reversal, entry PD array, balanced price range, and inverse value gap. In this case, it's a limit order. You can see most of my trades are always market orders. On this one, it's a limit order. Realized are 4.5, maximum risk reward would have been 6.3 hour. Entry time, again, you can see most of my trades are around 2 p.m. CET, which is 8:45 in New York time, right? 8:45, 10 a.m., 8:30, 9:30. So you see, most of my trades are around the second half of New York session heading into London close session. I barely trade or find setups in London session. Take a look at the previous months, you can see as well. Entry time, 10:15, 8:30, 7:30, 8:45, 8:30, 10. No, that was actually 4 a.m. New York time, 10. You see, most of my trades are in New York session heading into London close. The pound trades, daily frame, you can see that's how your daily chart should look like if you want to frame a high probability trade. We have bullish dealing range, swing high, swing low. Inside this range, we have a weak low, which is right above the discount of this range here. And then we see price confirming this being the objective in the short term by closing below this bullish imbalance. Proportion block, price trades into it, trades lower, close below the bullish imbalance. Now we have an inversion fair value gap, so we can expect price to drop from the inversion fair value gap into this daily week low. The H1, you can see here, we have those relative equal highs. Proportion block, we run those weak highs into this inversion fair value gap, and then I entered here on that move. Execution, inversion hourly imbalance, turtle soup of that weak high, invalidation of the strong high, then pyramid entry once we closed below this bullish imbalance. And we broke that down in the entire live session that day. And yeah, you can see here, total 4.5 R realized on that setup. Those are setups, but if you can catch one or two of those types of trades per month, they can really make your entire month, right? If you can get one or two of those. And it's not too difficult to get those, but you do need to have the patience to wait for those types of setups because they don't form too often. Usually you get one of those setups per week on average. Like we had this setup last week, and then we had a similar setup yesterday on Euro, right? And if you trade like, Euro or Pound or also the other majors, you can always pick the ones which fit the best with the narrative you have on DXY for that week. And then it's just about waiting for the right moment, wait for your bias and narrative to align. Then you just have to find a proper entry for that higher time frame narrative. London used to be goated. Yeah, London session used to be really good a few years ago, but recently, especially since Trump is being president again, I barely trade London session, or I barely can find any setups fitting into my system, because most of the moves happen late in the day, meaning around New York session, heading to London close, or even into the daily closure. And obviously, if you then have those expansions late in the day, then obviously, again, if you think about market profiles, we have expansion, retracement, consolidation, expansion, and so on. Meaning, if we have expansion late in the day, what will London session most likely be doing? Consolidation or retracement, right? And both profiles are not ideal to frame trades. And therefore, you also have nowadays less setups in London session, because then the expansion again is around New York session, London close, or sometimes even heading into daily closure. Then the last setup yesterday, the Euro longs. Unfortunately, I could not get into longs on all of my accounts. I only get into longs on 2 accounts. On the other ones I'm trading, I unfortunately could not get the entry since price did not give any, or not really any trades in London close session open, and therefore I could not get into any trades on those accounts. But that's just how it is sometimes. Bias bullish, right? We double swapped this low into the OB, closed inside the Monday range. Then we had bullish order flow on the hourly forming up into the next day. You can see here the daily outlook. I told you I at least want to see us trading with those lows. However, I would not turtle soup those lows with my stop here because of those equal lows, meaning the only way I would enter longs is if we get a lower time frame set up forming below those lows here around New York session where we had the 8:30 news. Then we can see here as well, we had price sweeping the lows, we had New York session, news coming out at 8:30 here, then we had price just jumping around, not being able to close above this bearish imbalance, then we closed above, and then I used the DXY to time my entry, DXY M5. We have seen, price forming this OB, and told you now you want to watch for price to displace from this OB or like proportion block. You can see here we displaced from proportion block here, close below, and then that set the stage for London close expansion. Now what I was referring to, we did not get any wick here, we just opened up, London close, and straight away dumped. Right, I already entered on longs on euro right here on that move, and then when I was switching to my other accounts manually, I was waiting for the 10 a.m. candle, London close session open candle, to give me this wick here into this propulsion block. But yeah, price just opened up and dumped. You can see here, flat open, flat open, flat open. So I could not get into any trade here anymore without chasing price. And I obviously don't chase price here anymore once we already are close to this low. So I just held my longs, which I had on the other two accounts. And then yeah, price just literally just shoot it up like a straight line and trade into the objectives, London highs, previous day's highs. And now I'm holding still some partials, stops at break even. So we will see how we open up the week. If we retrace back to my entry, if we can get up to the Monday highs, we will see. Again, that will be a topic for tomorrow's stream. But yeah, those have been all the trades which I have taken this month. 8 trades in total, a bit less than usual due to vacation obviously as well. But yeah, about 12R, depending on now how the partials of the longs on euro go. But yeah, do you guys have any questions?